Hello guys, welcome back to my YouTube channel. To my returning subscribers, thank you so much for your support. I don't take it for granted. To my new subscribers, my name is Sam G. I'm your lifestyle and personal finance guy. And please leave a like, comment, subscribe if you're enjoying the content, and turn on your notification bell so whenever I do post a video, you get instant updates. In my last video, I talked about federal versus private student loans. I gave some information on what they are and what the subsections are under the various types of loans, what kind of options you have on the federal and what kind of options you have on the private. I talked about stuff like subsidized loans versus unsubsidized loans, a direct plus loan, and a whole bunch of other things that I think you should check out. So if you haven't watched my previous video, please check it out. I'll put it somewhere on the screen, so please definitely check it out before you look at this part of the video, because this video I'll be talking about how to apply for the loans. So before you learn how to apply for them, you have to actually know what they are and what your options are, be informed of your options before you even make a decision or step to try to apply for them. Because a lot of people, especially coming into undergrad, people don't know too much about what their loan options are, what they mean, and this can make them vulnerable to predatory loan practices, especially with private loans. So definitely watch that video, get some information on it, and then jump back to this video and let's take it from there. So in this video, I'll be talking about how to apply for loans and just some other miscellaneous information that I may have not gone through in the other video I'll be going over. So without further ado, let's get right to today's video. If you're applying for student loans, your starting point is always going to be the FAFSA application. And before you can start the FAFSA, you're going to need a federal student aid ID. And if the student is a dependent, both the parent and the student are going to need a federal student aid ID. What the ID does is that it serves as your electronic signature as you complete your federal student aid documents. If you're a parent completing the FAFSA for your child or you're completing it with them, you can head right over to fafsa.gov to start your application. I'm also going to leave the link in the description so you can have access to that as well. You'll be entering the information for both the parent and the student if you're filed as an independent, and stuff like the date of birth, social security numbers, and the like, and that's what you're going to need pretty much. You're also going to fill out demographics and also financial information before you sign and submit the form. Now let's talk about what the process is after you successfully submitted your FAFSA application. Once you've been accepted by the school, you're going to get an award letter from the school. The award letter typically details how much financial aid you can get. This can be in the form of grants, in the form of federal work-study funds, as well as student loans. You will have the opportunity to accept or reject the loan offers that you have on the table, which will be indicated on the award letter that you get. If it turns out that you need more money after you've gotten your federal student loan offers, which sometimes may happen after you've maxed it out, you can also apply for private student loans as well. So again, going back to my previous video, make sure you've always maximized your federal student loan options before you look into a private student loan. And so again, if you don't know too much about this, check out my previous video and that'll give you some insight. To apply for the private loans, however, you would have to visit each lender individually. Some lenders allow you to check if you're pre-qualified. Some other lenders will let you apply first before they tell you if you're qualified for the loan or not. So it's really up to the establishment on how they run their business or run their operation. So to each their own. Private student loan applications usually tend to vary, but they may ask for school information, financial information, what you plan to do after you graduate, and sometimes may require a co-signer depending on your credit history if you don't have any. So that really depends on what institution you're applying to, whether Sallie Mae, Ally, Truist, wherever you're applying to, they have their own criteria of what they look at when you're applying for loans. So I have a bit of a list on what your student loans funds can be used for, because I know some people use it to go on spring break, used to go and do other things that, they're not going to arrest you for using your loan money to buy a ticket over to Tulum or Mexico, whatever that you want to go. But I just want to give an overview on what you can potentially use your student loan funds for, and then we'll go from there. So you can use it for your tuition and your fees, your books, your school supplies and other equipment, your meal plans and groceries, room and board. So obviously you're going to need money for that. So you can use student loans for that. Technology expenses like buying a laptop, an iPad for class, for lecture, transportation costs, going to and fro, cars, public transit passes, you have all of that. And also you should know that most private student loans mirror federal loans in that you have limitations on some things that you can or not use it for. So you have to be cognizant of that. So this is just a little of the list. It's not limited to this list, but it's just to give an overview of what you can use your loans for. So don't go too crazy out there and buy a ticket to Ghana or somewhere crazy like that. But it's for education. So as much as possible, you should try to streamline all your expenses toward that effort. So for this next part, I want to talk about how much student loans actually cost. Keep in mind that when you get a loan, you're essentially getting the principal, which is the amount you borrowed, plus interest that you'll be paying back. So you have to keep that in mind. You're not just borrowing, maybe if you borrowed $30,000, you're not just really borrowing $30,000. Based on how soon you can pay back, the interest may vary. So it's the principal, which is the $30,000, plus the interest you'll be paying over the term of life of the loan. Once you've taken a federal student loan, however, the interest is not going to change. So in my previous video, I talked about a method called a direct consolidation loan. If you don't know what that is, check out my previous video. If it happens that you have various federal student loans and you want to combine them using the direct consolidation method, what's going to happen to your interest rate is that it's just going to be the average of all your student loans. So it's not going to necessarily increase or decrease. It'll just be the average of all the loans that you've combined. The only typical time that your student loan interest rates would change is if you refinance your loans. And when I say student loans, I specifically mean the federal student loans. Obviously, with private, you have the option of a fixed interest rate as well as a variable interest rate. But I'm talking about specifically federal student loans. The only time it would ever change in terms of your interest rate is if you refinance it. Some private student loan lenders also charge fees like origination fees or late fees, so you need to keep that in mind as well. And like I said before, while federal student loans have fixed interest rates, private student loan lenders will often give you the option of choosing between a fixed interest rate or a variable interest rate. The lowest interest rates on private student loans are often available to borrowers with the highest credit score. So the lower your credit score is, the higher your interest rate is going to be. So keep that in mind. But this is not necessarily the same issue with the federal student loan. Now let's talk about student loan repayment options. Federal student loans have some of the friendliest repayment terms out there. They also offer a 6-month grace period, which means that you're not obligated to start paying off your loans until you've graduated, which is 6 months after you've graduated. The standard repayment plan for federal student loans assumes that you're going to pay off your student loans 10 years after graduation. You can also choose to enroll in an alternative repayment plan, an example being income-driven repayment plans. Essentially, what this does is that it ties your monthly bill to your discretionary income. There are mainly 4 types of income-driven repayment plans. The first kind is called income-based repayment. Your monthly bill will be about 10 to 15% of your discretionary income. With this method, if you don't pay off your loans in 20 to 25 years, your balance is going to be forgiven. Whether you qualify for your balance being forgiven or whether you qualify to have the 10% or 50% of your discretionary income taken out depends on the year that you first borrowed the loan amount. Those who took out student loans after July 1st, 2014 qualify for the more generous terms, which is about 10 to 15% of your discretionary income and student loan forgiveness after 20 years. The next kind of repayment plan is income contingent repayment. Your monthly bill is going to be 20% of your discretionary income, a fixed amount that you pay on the payment plan for 12 years. Any balance after 25 years will be forgiven under this plan. It's pretty self-explanatory, so I'll move on to the next one. The next one is called Pay As You Earn. This plan caps your repayment at 10% of your discretionary income and is never going to be more than you're paying under a standard repayment plan. And the balance will be forgiven after 20 years of paying consistently. There's also a revised Pay As You Earn, where it'll be your monthly bill will be 10% of your discretionary income, but it's not guaranteed that you'll be paying lower than what you would pay under a standard repayment plan. That's the only notable difference in this method. But also, like the previous Pay As You Earn, any balance after 20 years will be forgiven. The revised Pay As You Earn income plan does not have income requirements like the other IDR plans do. So that means that a borrower with federal student loans can sign up regardless of income. Federal student loans also have deferment or forbearance options, which means that you can pause your payments without hurting your credit history or hurting your credit score. Most private student loans have repayment schedules varying from 5 years to 20 years and offer many grace periods. The thing to keep in mind is that the interest typically accrues while you're in school and while you're postponing your payment. So interest doesn't pause just because you've gotten a grace period or just because you have a forbearance option or whatever is going on. This is specifically under private student loans. Another important thing is that private lenders are not required to have the same amount of forbearance options as the revised pay-as-you-earn plan does. Federal student loans can offer up to 3 years of deferment or forbearance depending on the circumstances. So this should give you a better idea of what you're getting yourself into when you get a federal student loan versus getting a private student loan. That's it for today's video, guys. Thank you so much for tuning in. I hope this is informative for everyone that is getting ready to come to college, everyone that's applying for financial aid. I hope you find this very useful. If you have any comments, questions, please just drop it in the comment section right below this video. And if you have any topics you want me to treat, please just leave it in the comment section as well. Leave a like, comment, subscribe if you enjoy the content, and turn on the notification bell. It really helps me with the algorithm. And also, I'll be talking about more lifestyle topics. Now we've talked a little financial heavy topics, but I'll be moving to the lighter stuff for like lifestyle topics. So please stay tuned. I have some more content coming. So thank you so much for tuning in. I'll catch you guys in the next video. Take care.